Hello and thank you for joining us on Global Business Africa, bringing you Africa's ever-changing business landscape from Nairobi to Johannesburg, from Cairo to Lagos. From the small businesses to the large corporates, we'll take you directly to entrepreneurs making business headlines. I am Penina Karibe in the Kenyan capital, Nairobi. It's 9 p.m. here in East Africa. Wherever you're joining us from, welcome to the show. Coming up tonight, China supersedes the US in purchasing power parity. We break down the numbers. The London Stock Exchange on an offensive to attract listings by African companies. And modern age basket weaving, we'll look at how a group of Zimbabweans have turned the traditional art of making containers into a modern profitable trade. So, does size really matter? That question's been on the minds of business people more than usual this week. The International Monetary Fund has forecast that China will overtake America as the world's biggest economy, at least by one measure. But not everyone thinks it's a fair assessment, as CCTV's Voldi Karelsu reports.
For long, China has enjoyed some of the fastest economic growth in the world. That's an engine for development in Africa too. And what happens in China frequently moves stock markets. This latest development, though, is raising eyebrows. According to the IMF, China's gross domestic product will top America's by $200 billion this year. That's based on a measure known as purchasing power parity. Basically, how far your money goes shopping in each country. The IMF says it's a good sign.
You have to take all the factors into account to actually assess the stability and the future of an economy. I wouldn't neglect demographics, by the way. So it's a sign that by that particular criteria, China is growing.
But some argue there are more important priorities. China's Vice Finance Minister Zhu Guangzhou says China is still a developing country and still trails behind the US in terms of economic growth quality. It trails on GDP too. It's the normal measure of an economy. World Bank figures show America well ahead. Still, China's GDP is worth more than $9 trillion. Putting that into context, Africa's biggest economy, Nigeria, is at around $522 billion. East Africa's Kenya is at just under $54 billion. Experts say that far more significant to global markets and to African development is Chinese economic stability.
A sustainable and stable development of the Chinese economy means a lot to a steady global growth. The world hopes for stable development in China.
Growth has slowed of late, but China will remain a powerhouse for development in Africa, whether or not it overtakes America. Voldi Karelsu, CCTV, Nairobi, Kenya.
So then, just what has driven China's phenomenal growth trajectory? We put that question to the global chairman and CEO of accounting consulting firm Ernst & Young, and this is what he had to say.
When you think about it, one statistic brings home for me, just 9 years ago, of the global 500, the largest companies in the world, 47 were headquartered in emerging markets. Today, there's 157. And after 10 years from now, over half of the largest company in the world could be headquartered from emerging markets. And there'll be companies that you'd never heard of. And so that's why lots of investors are trying to find those opportunities in those emerging markets. Both homegrown companies, entrepreneurs that are becoming big, you read about Alibaba out of China, and investments into emerging markets to grow the economies are where we're seeing a lot of the activities.
Well, let's discuss this further. We have here in studio Duncan Miriri, the Reuters East Africa correspondent, and we have live in Washington Daniel Wrenches. Thank you both for joining us. Daniel, let me begin with you. Well, the IMF bases these figures on the purchasing power parity measure, but when do we expect China to actually overtake the US as the world's biggest economy in real GDP terms?
Well, The Economist magazine has been tracking this these kind of figures and projections for several years now, and its latest estimate suggests that if the Chinese economy were to grow 7% with 3% inflation, the US economy were to grow 2.25% with 1.8% inflation, then China would essentially overcome the US in absolute GDP terms, dollar terms, by 2021. That is still a ballpark estimate. but it gives you an impression of quite how quickly China is catching up in real GDP terms, as well as surpassing them on this purchasing power ratio this year.
Right, Duncan, coming to you, Sino-Africa trade has grown tremendously in recent decades. What impact will China's new status have on development here in the continent?
I think it matters because we have got a lot of China watchers in Africa, given its role in trade, given its role in people who want to do business with other economies outside of this continent. So if you look at all the people who are interested in China's emergence as a counterweight, if you will, to other more developed markets, and and the relations between those those markets, China and African economies on the other hand, I think people are taking notice. I've seen people who are interested in China posting them on their social media profiles, internet. So it does matter. The emergence of China, as the development that you are talking about tonight. Yeah.
And Daniel, coming to you, what's fueled China's economic growth to these levels?
Well, it's clear that China's emergence as a global player in the global financial system through its acceptance of the World Trade Organization was pivotal in bringing it into the global economy. And it was able to compete very effectively, particularly in export markets, because for a long time China's wages were at a low level, but at the same time it was able to manage its economy very well. And therefore the US, as the major GDP country in the world emerging in the last 20-30 years, was able to buy many of those products, and many other countries that sustained good economic times, Europe, Japan, parts of Asia, were able to buy those products and bring China up to a much more middle market economy. And the question, I guess, moving forward is how it moves itself and its people up to the higher levels, and that's starting to happen.
Right, indeed. Duncan, coming to you, there's been a move towards the creation of yuan clearing houses here in the continent. So how long do you think it will be before we start seeing acceptability and interoperability for the yuan in African cities?
I think a number of governments here in Africa have expressed an interest in, in hosting these, the first of these clearing houses. And I think the idea that was mooted last year is, if a country like Kenya can have one, then it can serve the rest of the sub-Saharan Africa. Now, you cannot understate the importance of having a yuan clearing house on the continent, given the growing trade links between African economies on one hand and China on the other. So I think we checked in with the Kenyan government is one of the governments here in Africa that have stated an interest in hosting that clearinghouse. They put in a formal request to the Chinese government. We checked in with Kenyan officials a few months ago, and they told us, that request was still making its way through the, the Chinese, government hierarchy. They hadn't heard back from Beijing, but I think, as we go along, it could be a matter of months. It could be next year, but as we go along, I'm sure a lot of people will want to see this clearinghouse being established here, because what it does then, it removes the need for people to change local currencies into the dollar or into, and then to the yuan when they're importing things from China and so on. And then you remove all sorts of issues, arbitrage and that kind of thing. So we will see it happen, but it's a question of time.
Yeah, it definitely eases up things. Daniel, China's vice finance minister said that China is still a developing country and it trails behind the US in terms of economic growth quality. So what is the significance of that statement?
Well, the significance is that he still believes that China has to undergo many reforms. And also there was a recognition that growth on its own is not enough, that the growth has to be quality. And we've seen, and he recognized, that some of the growth has been at the expense of the environment and the health and well-being of Chinese citizens. So he's saying that we are a work in progress. We understand that economic growth in itself is not enough. That growth has to be quality. And also I think there's a tacit recognition that export-led growth and sort of levels of solid industrial production over capacity is not necessarily the way to go either. That you have to develop markets, in more internal domestic markets within China for consumer products, something that they are undergoing. And also lastly, he talked about the rule of law and how a good economy is based on a sound rule of law And that's another aspect of the reform process that is taking place now.
Right, and Duncan, coming to you, it was obviously the biggest market. 1.3 billion people is not really a small thing. Now, purchasing power is growing. So are African producers doing enough to tap into this market?
I think it's just another piece of evidence that African, African producers should be focusing on this. I see that you needed more evidence. The fact that we've got this massive market that China offers, I think had already gotten a lot of producers here in Africa looking at it keenly. But obviously there are issues, there are the cultural issues, there are issues that, to do with trade links, how can you get your produce out there? And I know if you look at the balance of trade data between economies like Kenya and China, you realize that trade has been in favor of China. But I think there has been a gradual drive between officials in Africa on one hand and the Chinese on the other to try and increase exports from Africa to China. And I think this will be another piece of evidence that perhaps it's, whatever efforts are required, whether it's people, whether it's increasing flights to China and so on, it might offer further evidence that the steps that Africans need to take to be able to export to this market more will be worth it in the end.
All right, interesting discussion we had here in studio. Duncan Miriri and Daniel Ranches in Washington, thank you both for joining us. Now, the London Stock Exchange has launched a major push to increase the number of listings of African companies. There are already around 125 African businesses on the exchange, worth in excess of $273 billion, and there is a continuing rise in demand among investors for African opportunities. Our UK correspondent Dan Whitehead reports.
On the trading floors of London, investors are trying to spot the next big opportunity. Increasingly, these are being found in African blue-chip companies. In the last 5 years, 55 African firms have listed on the London Stock Exchange. Now the LSE wants that number to increase further.
We're looking at companies who are essentially indigenous, so run by Africans, running businesses in Africa that are building and growing regionally and, of course, to become future global champions.
In April, the Nigerian oil firm Seplat raised $500 million when it listed in London. As well as the more traditional mining and resource companies joining the London marketplace, telecommunication and food firms are also joining the London Stock Exchange.
I think if you're looking to invest in the next 5 to 10 years, Africa has got such unbelievable possibilities. But, and there is a but, and the but is culture.
The issue of governance remains an important one. The UK Listing Authority, which acts as the gatekeeper for the London Stock Exchange, tightened the rules after governance issues surrounding the listing of ENRC of Kazakhstan and Bumi of Indonesia. In terms of Africa, the LSE says the issue of corporate governance is rapidly improving.
You now have some African business people at senior management level, all the way down to execution level, who've been educated overseas, who've brought back practices to their Nigerian corporates and have really made a big change in terms of how Africa is not necessarily viewed, but practically in terms of how companies are run. And I think that's going to be important moving forward.
With no shortage of Western investors, Africa's importance on the world financial stage is becoming more certain.
Investment in Africa's infrastructure continues, but it is the financial possibilities that are really exciting investors here in the City of London. And those opportunities are rising, with an ever-increasing number of African companies choosing to list here in the UK. Dan Whitehead, CCTV, London.
All right, so a look at the numbers of the main bourses that we track here on Global Biz. AGX remained closed Friday for prayers. All the other markets ended the day in the red, except the Nairobi Securities Exchange, which gained slightly over 0.1%. Coming up on Global Biz, the new way to call a taxi in South Africa. Johannesburg residents turn to the Uber mobile app. And we'll look at the way forward for Kenya's flour industry that is hurting from newly introduced taxes in the European Union.
We do know that the strike isn't anywhere near close to coming to an end either. That means that those workers are going to sink even further into poverty.
watching Global Business Africa. Welcome back. Uber, the global San Francisco-based startup company that is taking cities by storm, has arrived in South Africa. The mobile app service that connects passengers with drivers of vehicles for hire and ride-sharing is changing the face of private taxi services in the country. The multi-million app and sharing economy are part of South Africa's reality, as CCTV's Julie Shire found out.
With just a touch of a button and a safe, affordable and reliable ride appears before you. This is how simple this app works. Uber is an on-demand car service that allows you to request private drivers through applications for smartphones. From Beijing to Paris to Johannesburg, riders can open the app and connect to the same service that they have come to love. Passengers also travel cashless, as the app is linked to their credit cards.
I think people that don't know about Uber should know that it's very simple, very convenient, and the prices are very competitive, actually. It's cheaper for me to take Uber than it is to take a regular meter taxi.
This platform is not only simplifying the lives of millions, but is also generating 50,000 new driver jobs every month around the world. For Sherry Molalehi, this mobile application has changed his life.
I've never in my life thought I will get this kind of opportunity where I will be able to employ other people after like 6 months joining Uber. I managed to buy 2 more cars. I've been able to employ 2 more drivers. You're working for your own money.
Unlike other European cities, this service in South Africa is providing both drivers and passengers with solutions to many inherent problems.
We've been really, pleasantly surprised by the response from Meter Taxi in South Africa. We've been lucky in that we partnered with a lot of existing operators, and a lot of these existing operators see us as an ally rather than a threat. Uber brings unprecedented safety into an industry which really lacked regulation pre our arrival. When you book a trip using the application, you see what your driver's name is, you see what car he's driving, you see his number plate, and you see his picture. So you know exactly whose car you're getting into before you take a trip.
Uber's success in South Africa has been tremendous, encouraging the company to also launch in Lagos and in the near future in Nairobi. Despite disrupting the taxi industry around the world, this technology and the sharing economy are providing people with more choice, flexibility and convenience. Uber is certainly reshaping the future of cities and how we wish to navigate them. Julie Shire, CCTV, Johannesburg.
More than 150,000 Kenyans tend to lose their jobs if the horticulture industry collapses from the effects of new taxes imposed on Kenyan exports to Europe, the country's biggest market for fresh produce. Another 450,000 who depend on the sector's employees could also lose their livelihoods after European countries forced Kenyan exporters to sell their goods at higher retail prices, effectively pushing away potential customers. Kenyan flower farms are now threatening to relocate to Ethiopia or Tanzania, which still enjoy tax-free entry into the EU market. Kenya exports flowers to the EU worth $537 million and vegetables worth more than $307 million annually. The EU takes about 40% of Kenya's fresh produce exports. Well, let's get a wider perspective on this issue. Jane Giga is the Kenya Flower Council Executive Officer. She joins us now live in studio. Jane, thanks for joining us. So has the EPA been signed?
Not yet, but we are hoping that next week will bring brighter news for the country.
So not yet?
We have a meeting next week, which we hope will be the last meeting between the two parties. And we imagine or we expect that we shall come to an agreement.
Again, this perhaps may not be very comforting because for about 3 months now, there's been that back and forth, and a lot of optimistic talk that it shall be signed. So what makes it different this time round? Do you really think it will be signed?
Well, let me say this, Penina. There's been a lot of work done in the last couple of weeks. The negotiating parties have really been looking at their text and seeing what is contentious about that text and seeing how they can actually bridge the differences. And that's why we feel very optimistic that next week will certainly make a lot of difference for the industry. Having said that, that will not ease the problem as yet, because once that agreement is initialed next week, we still have to go through a process whereby Kenya will be reinstated in what we call the market access regulation. And that will take about 2 months. So there's still a bit more pain to come, but at least we can see the light at the end of the tunnel.
So there's been 3 sticking points as far as we know. It's been about the provision of subsidies for agricultural products, inclusion of non-trade issues. Just jog my memory on the third one.
Export taxes.
Exactly. Export. Who exactly, of course, is going to have that express determination of when to impose these taxes. Why won't they agree?
Listen, both parties are trying to get the best deal for their constituencies. The European party is trying to ensure that they have access to raw materials as and when they want them and as much as they do. And the Eastern Africans want to make sure that they retain the sovereignty over their raw materials. And so they need to come up with something that is acceptable to both parties. In terms of export subsidies and domestic subsidies, the Europeans want to make sure that they can continue subsidizing the farmers. And obviously, the East Africans feel that this will threaten their own production if the European products were to come to this part of the world. And obviously, they have to look at ways and means of ensuring that both parties are comfortable with each other in the marketplace.
Right. So your members are saying that they stand to lose about $11 million a month as a result of these taxes imposed on Kenyan exports to the EU. And some flower farms are now threatening to relocate to Ethiopia and Tanzania. Are you really leaving?
It's not that easy. It's not easy to pack your bags and move to the next country. You're talking about a biological system, and you have to wait for the flowers to grow, and you have to wait for the, for all that goes into it. But what I can tell you is that definitely the flower growers are business people. They will look to, if you like, they will look to spread their risks, and wherever they can find the comfort, they will go. But we're hoping that the 2 months will not spread to anything more than that, so that we don't have to actually do that.
What's going to be the impact of this move on the Kenyan economy, on the EAC economy as well?
It's not just about flowers, but you're looking at about 22% of our exports that go to the European Union, 22%, and only 9% of that is flowers. So you can imagine if we were to lose, if any of those exporters into Europe were to lose their market, you can imagine what that would do to our GDP, our foreign exchange, and worse still, what that means to our workers and the investments that are actually on the ground in Kenya, worth about 110 billion Kenya shillings.
Yeah. And obviously this has now brought to the fore another very significant question. Are we looking into diversifying our markets as the EAC region? Is this something you've explored?
Well, let me tell you, these are business people, and they have certainly been looking at diversifying their markets. You'll be happy to know that we are now the #1 supplier to Japan in roses. We have ventured into the Eastern Europe countries, and we're hoping that once we have cleared our airways with America, we can get direct flights. We're hoping to be able to put our flowers in there. So of course, the business has been looking at diversification, but Europe is the world leader in terms of consumption of flowers.
Right. So finally, before I let you go, Jane, there was a concern that Kenya's flowers into the EU are not meeting the minimum levels of standards set by the European Union. Has this changed?
Contrary to that, Kenya is one of the most credible producers of responsibly grown flowers. And what has caused a lot of this mayhem, if I can call it that, is that like any other situation, you do go through audits. And when you have an issue that comes out of an audit, you need to address that issue. And this is exactly what happened with our residue levels and our harmful organisms. And you'd be surprised, 52% of the issues is documentation. And so we are working at that, and I think we've done a very good job, and I will not be surprised if we don't have issues at all to deal with.
Wow, you sound quite optimistic, Jane. Thanks very much for joining us. That's Jane Ngigi, the Council Executive Officer of the Kenya Flower Council Executive Officer. Well, let's have a quick run through commodity prices. And gold retained most of the gains from a 4-day rally on Friday and was headed for its best week in nearly 4 months as a slump in equities and growing worries over the global economy attracted safe haven bids for the metal. Coming up still on Global Biz, we'll look at how a group of Zimbabweans have turned the traditional art of making containers into a modern, profitable trade. Welcome back to Global Biz. Zimbabweans have adopted several strategies to sustain their livelihoods, generate income and create jobs. One of them is the age-old art of basket weaving that's now being combined with modern techniques. The revival of this artistry has been an economic lifeline for many and makes for our grassroots segment.
In their quest to survive, Zimbabweans have acquired skills such as basket weaving to create sustainable jobs and an income.
I think in Africa we all rely on our governments to provide jobs for us. You can create your own job by doing projects that are self-sustaining in an environment that is difficult.
The finest basket weaving from Honda Valley, Binga, Mavingo, Bulawayo and Lapani have fused with contemporary artistry to make an innately Zimbabwean product handed down from generation to generation.
We also have a Ministry of Sport, Art and Culture, which is also encouraging the idea of self-sustainability, of self-creative. And the creative sector of Zimbabwe, that's the only way it can grow, through the making of our crafts, through the making of our art.
A visual art and design project called Basket Case has brought together artists from Zimbabwe, Nigeria, Germany, France and the UK to help weavers develop a range of innovative designs. The project, which includes a series of workshops on crafts, design and visual arts with an exhibition and catalogue, runs from the end of October through to December.
The objective of the project was to contribute towards sustainable development in Zimbabwe, and also the strategy we are using or looking at is opening up market linkages and development channels for these communities.
Beyond the aesthetic value of basket artistry, it's also become a way to preserve Zimbabwe's cultural diversity. Clementine Logan, CCTV.
A quick check at the currencies now. The Kenyan shilling weakened on Friday as traders bought dollars to square positions before the weekend, while stocks inched higher. Traders say demand for shillings to meet tax payments could help strengthen the currency next week. Banks will also be unwinding dollar positions to comply with the central bank's cash reserve ratio cycle. Right, and that's it for this edition of Global Business. Remember, you can send your feedback to globalbusinessafrica@cctv.com. You can visit our Facebook page, CCTV Africa. Also stay in touch with Global Business on Twitter using the handle @CCTV News Africa. I am Penina Karibe. Thanks for watching.